What's up, fam? It's your boy, and you already know what time it is, baby. Hey, look, man, look, I want to get directly down into this video and talk to you about a lot of things dealing with the option market that I'm looking at today. As a matter of fact, I know a lot of you are questioning SPY calls for 500 because your boy been saying it for as long as I can remember, and since this last month has started, and I have been piling up on SPY calls, and I have not yet let loose on any one of those options contracts at all. I'm holding on to them, and we're going to see how it plays out. Now, here's the thing that I want to talk to you about today. I talked to you yesterday about how basically a lot of the market was up in panic, up in an uproar about maybe the yield rates coming in and being raised earlier ahead of what expectations were about September of 2022 to June 2022, quite possibly happening in May of 2022. Now, why is this a significant event? Because really and truly with these yield rates going up, that means that now banks are actually going to be able to get their interest rates back up beyond zero. And this is going to actually take that flat interest rate back up beyond zero and make people have to actually spend way more money than they actually wanted to on any type of loan in the market, okay? Now, one of the important things about that is corporations are actually going to have to deal with these yield rates as well. And now a lot of the priced in valuations that we have seen that's been pulled forward so much during the pandemic ahead of 2021, and now that we're heading into 2022, this is one of those things where the market is saying, oh no, we don't want this. No, we need to stop this. We got to take money now and set it to the side. Well, fam, this has impacted the tech sector so much, and you know your boy, you already know how he rolled. We have always loaded up on tech stocks the most at any point in time on option contracts, okay? And right now, they are in the headlock. Like really and truly, the nomination of Jerome Powell as the Fed chairman again by the Biden administration has really and truly been pretty much what a lot of people would say a godsend for the monetary policy type of house. But at the end of the day, knowing what people are thinking about with this monetary policy being actually pushed up forward way quicker than expected because of inflation talk, and none of this really has been deflationary as it looked. We see supply chains are still being gridlocked. We just heard Best Buy and DraftKings, two companies that I actually took option plays on yesterday ahead of their earnings calls, and seeing how they were impacted by supply chains and how they're now moving from more of an online store back into a retail store has now impacted them so much that Wall Street has seen an opportunity here to say that they should not be priced at the valuations that they are because their e-commerce business is not doing quite as well as a lot of people has expected to. But really and truly, let's think about this for a second. Is this an opportunity right here, right now that Wall Street is getting wrong, right? Is this something that really Dick's Sporting Goods or Best Buy has in their favor where a lot of people are not giving them the opportunity? See, to me, when you look at it, Dick's Sporting Goods, Best Buy is not like the likes of Zoom, right? Where Zoom is commercially based on people staying at home and using the device, okay? Dick's Sporting Goods, Best Buy, Walmart, Amazon, Target, name a company who does e-commerce, who actually has retail operation as well, seems to me to be in a better position, but due to the height of the pandemic was able to pull so much valuation forward that a lot of these people are still expecting that these revs to be at the same time. When I say revs, I mean revenue. They think that they should still be at the height that they were at the busiest time of our lives when no one had anywhere to go. So now that people are out, they're seeing that the margins are shrinking on e-commerce business, and now they're trying to pay this back on the stocks and make it painful for a lot of people who are holding these option positions or who are holding shares at this point in time. Any way it goes for me, what I'm looking at is if you take the stance that I always take, that longer is better than shorter, okay? And what I mean by that is that you are not taking a short-sighted position on any one of these companies, that you are not getting locked into weekly contracts where basically you are going to have to either know for a fact that that company is either going up if you're on the call side or it's strictly going down on the put side. And a lot of the times these weekly contracts are bids that you can make on news catalysts for any things of that nature. But in this video, we're talking about Short-term trades can get you in a hurt locker, and you can use long-term trades to actually hedge your bet that the company will restore where it came from. Now, in all cases, this doesn't always work. Take in the likelihood of Visa, okay? I bought Visa contracts back in early November, and I was looking for this to be a December 17th expiration, where I seen Visa was actually going to be able to make a nice run. As a matter of fact, let's pull it up on the chart, and I'll show you exactly where I thought this run was going to take place at with Visa, okay? So we'll pull it up on Webull. We'll go ahead and get into that over here in 1 second. Let me pull it up for you on the chart, and let's get it up on the screen. So let's talk about Visa here, okay? So let's check this out. So your boy was looking at Visa, okay? So when I actually got into Visa, I was about here, right? Right around this area, about this 233.40 mark, right? That we're at. I bought 235 calls on Visa, and Visa actually started coming out with negative catalyst news. The financial sector at first took a hit, okay? Financial sector took this hit, so we know we saw 235, and then we completely been in a downtrend ever since, okay? And what I looked at when it came down to Visa was that the news that we were seeing was not something that should have kept this stock down. So what I decided to do was to double down on my position, average down on my position from wins that I was having, keep averaging down on the position, looking for a point of return. One of the things that I want to tell you is that you got to understand that the rebound happens here, right? So we got this consolidation period, and this is when I averaged up thinking that maybe we were going to move up again. No, we pulled back down more, because then Amazon comes out of the nowhere and says that they are not using Visa any longer in the UK. This was crazy to me. And we're not talking debit cards. We're talking strictly credit cards. And now I'm starting to believe that this may be a possibility here in the US as well. So the pain may just not be over just yet for Visa as one of the top companies to actually be invested in during the retail holiday season period. And right now, Visa is in pain. They're up 1.4% today, but Visa has now essentially went from a $233 company down to $194 in a matter of time, in a couple weeks, okay? So now, what's the difference here than what I'm actually talking about with the likes of DraftKings? I'm sorry, I keep saying DraftKings. I don't know why. I guess because they both start with a D. But Dick's Sporting Goods and actually Best Buy, okay? When we talk about Best Buy, look at how far Best Buy has came since the pandemic, okay? If we just go back out here, you'll see that this is in March of last year, or this year earlier, right? But if we come back here to where they actually were during the pandemic, look here. We're talking about a $48.11 bottom here, right? All the way up to $141.97. Essentially in almost over 18 months, this company has actually turned itself around into a bigger name company, and they just now suffer one of the biggest drops in modern since the actual pandemic, okay? Look at this drop here that we actually are experiencing right now, about this $115 level that it came down to before selling that back at $120-$150. Now, I'll tell you, we're in calls in this, and I have not yet sold those calls, right? I believe that tomorrow gives us the opportunity to see recovery, because we're seeing the SPY recover today, right? And the SPY was beat down a lot today. People talk about my $500 calls on SPY. Are they really going to happen? Matter of fact, we had a poll that I ran last night that we actually seen that a lot of people are actually maybe on Team Craig when it comes down to actually SPY going down to $500. If you're not part of my team yet over on the Discord, or whatever, not on the Discord, on YouTube, where you need to be a member, you need to go ahead and subscribe to the channel. That's definitely what you need to do, because that way you can be getting these community posts that I leave up each and every night at some points in time when I think about things like this, right? SPY going to $500. We had 15 people vote on this already. 67% of you say that yes, it's likely that we're going to 500 by 21 January 2022. And I find that important. I find that important because of the simple fact that people are still positive in this market. When people are still positive in the market, that lets us know that we have not yet reached that top yet. But this is what I still recommend to any and everybody. As you bring in profit, start putting some of that in cash and then reallocate that to new positions, further positions out. And I'm going to continue to do the same process. With Dick's Sporting Goods, I took a hit with it early today, right? But I think that we're going to recover just fine in that position. Over in my Discord, I leave you each and every day with short trade alerts, long trade alerts, crypto trades if I make any, and I let you know the synopsis behind the reason why. Now, I actually sold JP Morgan today, one of the financial sector stocks, right? early today because I saw that the trend was slowing down. The momentum behind that play was easing. And with that easing, I took 60% profit on that particular play, put it to the sideline, and let's wait this out a little bit more, right? Things like Best Buy, things like Lucid, things like Tesla, all these plays are in tech favor for me. And right now we're seeing tech take a beating, okay? Matter of fact, I have AMD runners out there. I have Apple plays out there. All of these are taking a hit right now simply due to the fact of what we're seeing from the indexes, okay? When you look at the indexes, you have to understand that this is where we're starting to see that volatility still playing a role in the market. And when volatility is high, naturally tech takes the beating first, okay? So we saw that rotation happen yesterday with all three indices, but the one that continued to take that main focus today was the Nasdaq and the S&P 500. And then after that, we saw the Nasdaq be the one that actually still continued that beating, even though it was down about 1% on the day before finishing down 0.5% on the day, okay? When you look at the VIX right now, you'll see that I keep this trend line here on the VIX all the time, right? You'll see me pull it down here in a second. You'll see you get this 1502 is my support line on the VIX. I've drawn this so long ago and it has held steady just essentially as it has ever since the pandemic, okay? So we have not yet retreated below this level just yet, but a few times. And I'm expecting that we're going to see this pullback continue really systematically on the VIX. It got up to this high point yesterday when it got closer to 20 yesterday, and now we're starting to make that move back. Today we got up to 2090, and now we're starting to make that systematic drop back down here. And I think we're going to come back down to my trend line that we have here. When it comes back to this trend line, expect tech to take off again. And when tech takes off, it rallies the SPY. The SPY is going to move, and we're going to be having watch parties when SPY hits about 485 in support of going to 500. Fam, this is what I'm getting at to you. Don't take your eyes off the prize when you have momentum in your favor and you have the patience and you know you have the knowledge of what's really going on and you are actually doing your due diligence on type of homework like this. Today was a beat down of my portfolio when it comes down to the tech sector plays and the consumer discretionary that plays in tech and some of the ones that actually deals in e-commerce. I expect all of those to rebound. We had the likes of Target up today, right? We saw Target up today and Target made that move. $4 on the move on the option play. That's systematically a good approach for Target on the day, right? What I expect to happen is that we'll start to see recovery very soon because I think that this was a systematic drop in the SPY based on things going on, and we got some people that got caught in the bloodshed of it, and I think these companies are going to come back and we're going to make these moves up. So for me, my game plan stays the same. Keep investing, invest the right way, but take money off the table when it's important to take money off the table. Put it to the sideline. Do not overextend yourself. Do not put yourself in margin. Keep yourself clean so when the markets does start to bleed, maybe sometime in February is where I think my next pullback will be seen. That would be a bigger pullback that we are normally accustomed to in the markets as people start to turn their head towards the focus of the rate hike in May or June timeframe. But right now, no need to get greedy, but you definitely need to have your feet still entrenched in the market and doing the right things. If you like the type of psychology that I bring to this game each and every day, you definitely got to subscribe to the channel and you definitely got to bang that notification bell so you can be notified each and every time I drop way more high content like this. Definitely use that first link down below if you want to be a part of my Discord where you get my short term, my long term, my crypto trades, my psychology on the stock market, and one-on-one time with me, or even in a group chat with me over in the Discord. You can use that first link down below. And if you want to do anything else, definitely use my link down below for a ladder where you can actually apply to a life insurance in just 5 minutes. It's simply the right thing to do for yourself, but for your family too. I'll catch y'all in the next video, man. Y'all stay safe. Peace.